And welcome to Moneycontrol. I'm your host Nikki Mirchandani. We are here to talk about the newly listed entity, Zaggle Prepaid shares, which have almost surged 18% on Tuesday, hitting an all-time record high after the company announced that it has entered into an agreement with EasyMyTrip Planners for 3 years. The company also reported a healthy December quarter performance. But what's more in store for the company? Let's find the answers out from the company's co-promoter, managing director and CEO, Avinash Godkhindi. Well, afternoon there, and thank you so much for taking out the time and having this conversation right here with us. Tell us more about the pact that you've now signed with EasyMyTrip Planners. The agreement is for 3 years to sell integrated travel and expense management solution to your corporate clients. Tell us more about the synergies. When would it start reflecting on the financials? What sort of contribution are you expecting from the collaboration?
Good afternoon, Nikki. Thank you so much for having me on the show. And look, EasyMyTrip is one of the very well-known travel aggregators in the country, and the whole deal is for us to be able to take their APIs and for every travel booking that's done by employees of corporate customers through our expense management platform, we start to earn revenues for driving that business to a travel partner, right? So a very large part of the value proposition of an expense management platform is the ease of being able to manage your travel requirements. And we already work with other travel partners, and adding EasyMyTrip is a great addition to the list, so to say. And as we go into the new financial year, we'll be able to see revenues kick in and uptake come in from this program.
Sure. What sort of revenue contribution can be expected from this partnership per se, when it will start reflecting on your financials? Could you tell us also about your latest win that you've thus far scored in the Q4?
Yes. So the way these partnerships work, Nikki, is once the partnership is signed, the integration work starts, and there's a implementation time or an integration time for that, which is ranges from a couple of weeks to maybe a couple of months, and then you take the integrated solution to the market. Right? It's not that we don't have this capability already with other partners, but what's different here is the EasyMyTrip catalog and their range of options that they would bring to the table in terms of travel services, and two, of course, that in this partnership we earn commissions for every travel booking also that comes in. So this is a great addition to what we already have as our expense management platform. Through the self-booking tool, we'll be able to get this service. And we should see these revenues kick in the next financial year.
What sort of commissions would you get from each order which have been booked from these platforms? How many such orders are you expecting? And could you give us a ballpark understanding in terms of financials of how the numbers could look like from the deal?
So, Nikki, that's too premature for me to say. We have millions of users who book lakhs of tickets through our platform today, right? And each order we would offer, amongst other travel aggregators, EasyMyTrip as a prominent one. And the objective would be to drive maximum volumes through this whole offering to corporates, right? So, but I would say it would be a little premature for me to comment as to how much revenue volume this would generate. It's also, the way to look at it is, it's not purely volume alone. It is the comprehensiveness of our solution increases significantly. The solution becomes a lot more comprehensive by introducing the ability of these users to be able to book tickets on EasyMyTrip.
In terms of the percent revenue contribution, could you give us a ballpark figure there? Do you expect a 2-3% kind of a revenue contribution coming in from this one? Sure, you said that it's premature to comment on this, but in your mind and while signing off of this pact, there would be some kind of projection, of course, that the company must have worked through in order to even have this partnership go ahead, right? So could you provide us with some color?
See, I wouldn't, again, that's precisely what I'm saying, Nikki. It wouldn't be right for me because we are adding other travel partners as well. We are adding other partners as well. So the overall pie of revenue, how it would shape in the coming years looks very, very attractive, right? So what it would be in terms of percentage, it wouldn't be right for me to hazard a guess right now. Of course, we have our internal projections. Of course, we've done estimates, but let it see the light of the day, let it fructify, and then we'll be happy to share the numbers.
FY25 is when you expect the revenue to trickle down on your financials. That's going to be from the first half onwards, or how?
Depends on how quickly we are able to get the API integrations done. We expect the integrations to be done fairly soon, and then in the first half, you'll start seeing some impact kick in. But as we've seen in our business, Nikki, each of these initiatives, whether it's a bank partnership, whether it's a travel aggregator as a partner, each of these have their gestation period. None of these, or a network partnership, none of these actually start yielding result the next day. Because this is a business which it takes a significant amount of time to build and for it to grow.
Okay. Let's talk about your order book and the revenue visibility with it. What can be expected by FY25? What's the status as of the 9 months ended FY24? Provide more color on that.
So 9 months ending in FY24 has been about 500 plus crores already. And we should close the years, somewhere between 750 to 800 crores in this financial year. And the next year we would grow at 40% plus.
In terms of your revenue growth, right?
Yes.
FY25. How about FY24? What is the kind of projection that we can look at by the end of this financial year?
FY24, already we've given the guidance of 40 to 50%, and we'll be in that range.
All right. You've also provided some color in terms of your order book growth. What's the number clocked in right now? What can be expected going forward for the next year? And also, what are the major wins thus far that we've seen in the ongoing Q4?
So, the order book philosophy probably doesn't apply directly to us, Nikki, as we are a SaaS fintech. We're not an IT services company. So, I want to clarify that to your viewers. The way we look at it is partnerships and the corporate customer signups. So, corporate customers, we've already announced, quite a few signups. We've, Lifestyle, which is Landmark Group, Quest Corp. We announced, Times of India, which is Bennett Coleman. A couple of other announcements are in the way. So the growth volume is really strong in terms of both the number of contracts, but also the quality of contracts. So that's something we are seeing great momentum kick in now.
Okay, what are the number of contracts right now, and what kind of growth are you anticipating going forward?
So totally we have about 2,800 corporate customers as of Q3 this year ending, and every year we add about 600 customers, and that's something that's growing year on year.
Okay. All right. You also have an agreement with Visa, right? How is that done in terms of the business momentum for you in the last 3 months? What sort of business momentum has come through Visa? Can you provide us more revenue understanding there?
Nikki, so it's a 5-year spends link contract for Forex cards. The Forex program is yet to be launched. We linked the incentives with Visa, and we should be going live in the next couple of quarters with the Forex program. As I mentioned to you earlier in the program, in our business, any of these card programs, any of these partnerships have a gestation period in terms of go to market. And we need to stitch up a few of these aspects of the program for them to see the light of the day, right?
Sure. You had intent to implement a fleet loyalty program with Torrent Gas as well, right? What's the progress there?
Correct. So we've done the pilots with Torrent. The pilot, it's a very early stage pilot that's which is being completed successfully, and again there we should start seeing some revenues come in the next quarter. So again, all of these programs, as I mentioned, you sign a contract, you get into the integrations and implementation, and then gradually these programs generate significant volumes.
All right. For Visa, you suggested that the integration will take place by when?
The next couple of quarters, it's not an integration per se, it's a launch of a Forex card, and that should be in the next couple of quarters. We anticipate that program.
So the first half of the next financial year is what we're looking at. Okay, let's also talk about your Q3 performance. We haven't really had the chance to touch base with you post your Q3 numbers, which have been fairly solid there. The reported EBITDA soared 175%, if I've got that right. Adjusted EBITDA before ESOP soared in by 57%. Tell us more about the adjustments and what kind of growth can one anticipate going forward?
Growth is going to be strong. This is a space which is growing very rapidly. We are the leading player in the spend management space, and that really helps bringing a lot of confidence for both partner banks as well as partner corporate customers, right? And other partners like EasyMyTrip and a whole host of them. Because this space, everybody intuitively gets that there's tremendous opportunity and potential. But the challenge, Nikki, is always, are you going to be there for the long term? Are you a sustainable company? Are you a profitable company? Are you compliant? These are things which have created, a lot of tailwinds for us, because these are our strengths. And the market has started to recognize those strengths. So overall, we are seeing momentum kick in and operating leverage kick in. We anticipate that this will continue in the coming quarters.
Also talk about your margin guidance out there. 10% is what the company clocked in versus 5%. Help us understand what really went behind the double-digit margins of the company that the company has delivered in Q3. And is that the run rate, or I just say the margin profile that we can look at for Q4 as well?
See, Nikki, some of these are also impacted by the ESOP costs, right? And we took a fairly significant amount of ESOP cost in our first 2 quarters. So our guidance for this financial year is about 19 to 20 crores. And the first 2 quarters, we already had taken about 13.5 crores of cost. Last quarter was about 2.5 crores. And going forward also, it would be very reasonable or very controlled. And that obviously helps our overall PAT margins.
All right, so we're just going to leave it at that. And thank you so much for taking out the time and having this conversation here with us.
Thank you for having me, Nikki. Have a good day. Bye.
You too. Well, that was the management of Zaggle, pretty much confident when it comes to the signing of new orders and also the kind of volume that you're looking to generate from the collaborations thus far. Also have given a solid guidance in terms of the top line performance, not just for this year, but also optimism spreads across the next financial year. But that's all that we have in this edition of Trade. With this, it's a wrap and goodbye.